We're going to go to PVR right now. We've got Ajay Bijli, Chairman and Managing Director of PVR, and Nitin Sood, the CFO of PVR, joining us now on the line to talk about their rather good-looking numbers, if I may say so. Good afternoon, gentlemen. Ajay, it's been a good quarter. The exhibition business has done very well for you.
Yeah, absolutely. I mean, we're very happy with the kind of growth we achieved on various fronts, which is overall revenues have gone up compared to last quarter by about 24%. We are at about 421 crores revenue. Our EBITDA margin has improved. We are at almost close to 20%, and it's 85 crores, which is much higher than what we did last year in the same period. So very happy. We've got 16 million people who visited us. We are up on SPH, which is the food and beverage revenue, and even our marketing income has grown by about 25%. So it's been a good quarter on the back of some good films and underpinned by our own circuit in the right locations and the right malls.
Okay, let me ask your CFO, Mr. Sood, on whether he thinks this is the sustainable performance, given that, last quarter you saw some big movies like Bang Bang, Haider, Happy New Year, PK, all of which perform well for you. So that's one reason for why you've done well. But of course also the other reasons, as Ajay pointed out. How much of this is sustainable, Mr. Sood?
Nitin?
Sorry, I'm not getting
they're saying how much of it is sustainable. Sure. I think it's sustainable. I mean, I can answer that.
Go ahead, Ajay. Yeah, no problem.
Can you hear? I think it's sustainable because, as I said, it's a symbiotic relationship that we have. One is the exhibition circuit. First of all, the circuit has to be good. It has to be at the right locations, and it has to be in the right malls, right cities where major consumption of movies is happening, and that's happening across the country. And PVR has tried to have a circuit which is very well positioned, and then of course you have a constant flow of films, and the appetite of people to watch movies has to remain. So I think if you look at all these three factors, I mean, it is a sustainable model. Of course, fourth quarter, you have issues of exams and IPL and this time World Cup is coming. So traditionally, fourth quarter has always been slow. But otherwise, it's a three-quarter sustainable business at the kind of numbers that you've seen in quarter three.
Okay. Ajay, Nitin, hi, afternoon. I just wanted to talk about the food and beverage revenues a little more, because I understand the average spend has increased by 23%, which is the highest you guys have ever seen. Do you expect this to go up further, and how much could that result in higher overall blended margins for the company?
Yeah, food and beverage, I mean, we have a captive audience. 16 million people came this quarter. Overall, about 70 odd million will come. And we're just focusing a lot on ensuring that the perception of food and beverage being sold in the cinemas improves dramatically. So a lot of focus on the back end, supply chain, quality, the way we sell. So I think it's a very important component. Almost 350 crores of revenues come from food and beverage. So obviously, and the COGS, which is the cost of goods sold, is close to about 27-28%. So any growth in this revenue line only improves overall margin. So we're focusing a lot on that.
Okay. Nitin, if my voice is reaching you, your average ticket prices, are there any more hikes that you guys are going to take?
So we look at our average ticket prices very carefully. I think they are all measured on the time of the day and day of the week basis, and they are very local catchment driven. On an average, we've seen our ticket pricing growing at an average CAGR of about 6 to 7% over the last 5 to 6 year period, and I think that continues to hold true even for this year as well. So I don't think there is going to be any dramatic, significant change from that, but I think we'll continue to grow with the rate of inflation.
Ajay, what are the movies in the pipeline in the months to come?
Well, this January has been pretty good. You had Baby and a few other films, but we've got Roy coming, we've got Shamitabh coming, then there's a movie of Varun Dhawan called Badlapur coming. So this is the last quarter. So up to February end, we have films coming, and then March we have some smaller films. But next year again we have the usual lineup of Ranbir didn't make any movies this year, barring Roy. So 4 films of Ranbir are coming. Then you have your Diwali Shah Rukh, you have Salman Eid, and then you have Akshay every quarter, and then you have...
It's like you branded the festivals, haven't you? Diwali, Shah Rukh, Salman Eid, Akshay Christmas.
Well, that's the pattern, and then either on August 15th or October 2nd, you have Hrithik. So that's how the pattern has been, for the last several years, that, these key superstars, they come out with these movies on long weekends when there's a public holiday, which is very good for the business as well. And they've anchored those positions. So in fact, there's more predictability in your revenues as well now, because you know that these guys are going to come around these dates. So it's a good lineup. Hollywood films are looking much stronger because they had a bad year last year. But a lot of big movies like Avengers 2, James Bond, Superman 2, these movies are the ones which fill up the cinemas. So they may not have the critical acclaim, but they have a mass appeal. So a lot of movies are coming like that. This last couple of months now, we have a lot of Oscar films coming. So again, before Oscars, because our cinemas are, in demographics where people like English films, Hollywood films. So even the Oscar films in PVR do very well. So we are okay for the next, this quarter as well as the next year.
Okay, you're slated to cross 500 screens this year. By when will that happen?
Well, this quarter end will reach about 483 screens, and we have almost 100 screens that are fit out at any given time. So maybe end of quarter one next year, we should be close to 500 screens.
Okay, Ajay, just one final question from my end. Coming back to the food and beverage business, there's one complaint from a lot of moviegoers like me that the prices of the beverages go up every time you go. In fact, it's become exorbitant now, the prices of popcorn, etc. Are you planning to take any more price hikes over there?
Actually, the last question is always the hat is being worn of somebody who's interviewing and analyzing, and also of a customer. The last question is always, that's becoming a trend now, isn't it? No, I think pricing is a very analytical thing. We just can't at random charge anything we want to. But we have to be very careful. But we try to maintain a certain standard, certain quality. There's a lot of wastages that happen, so we get rid of that. But generally, people are happy with the quality. That's why you are seeing a big improvement in our F&B revenues as well. But wherever we do find that pricing is becoming too high, we try to come up with combo offers, discounts, to ensure that people don't feel that it's too much.
I'd like to add to that.
Go ahead, Nitin. Go ahead.
To add to what Ajay said, bulk of the growth, if you look at this quarter of 25% on average spending on F&B, has actually come from the volume growth. It's not driven by pricing growth. So out of the 25%, 7% has really come from pricing. But about 16 to 17% has actually come from people consuming more at cinemas due to the change in quality of food and beverage offering. So I think that's a good signal for us to say people want to consume more when they're coming out to watch movies.
Ajay, a quick last question has to do with a new emerging big competitor in your space, Carnival, which has been on an acquisition spree. It bought a bunch of screens in the last few months, and it aims to get to 300, 400 schemes this quarter. A quick word in?
Yeah, basically the way they're growing is inorganically.
Yes.
So therefore, for us, the logos have changed. Earlier it was big cinemas, now they're Carnival. They were Glitz Cinema, they're Carnival, or HDIL that they acquired. So the number of screens is still very less in India in terms of. So I think there's no new growth as such that we are seeing with all this. So I think there's plenty of room for everyone, and I respect everyone. I mean, they've come into. We always have to be on our toes, and we keep an eye on what everyone is doing. At the same time, we are pretty focused on our own strategy. So I think it's still early days before we start panicking about too many players.
All right, we'll leave it there.
Still
We'll leave it there. I'm so sorry to interrupt you, but we do have to cut across to ICICI Bank.